you actually do it. So anyway, that's how I get started. So let's get started with the webinar. So again, thanks everybody for coming here. Again, this is we're going to talk about the SPY Super System software. This is the actual software that we run on Thinkorswim that identifies when institutions are in trades and when they're not. And I have a trading room and alert service. Trading room is open. I'm there every day from market open to market close. I take about an hour for lunch. But I've got the SPY Super System software up all day, so we can talk about different symbols, different stocks, and we look at the SPY, the Qs, the IWM, so we can see what the market's doing. And I answer lots and lots of questions from members, and a lot of members will suggest trades to take, and a lot of our trades now come from members. We've got some really seasoned and either semi-professional or professional traders in the room now, and we get a lot of trades from them. So we've got a lot of eyes on the market, all looking for the same kind of setup, highest probability trade setups. Okay, so let's get started. Again, the first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, if you have any questions, by the way, obviously pop them in the question box. I'll keep the question box open during the webinar. But if there's something I can't answer, if you would just put your name and number or your Skype username in the chat box or the question box, Rory from Right Line will get back to you, most likely today or tomorrow, if not by Monday. Just depends on how backed up he is. We get a lot of folks coming aboard over the weekend. So you can do that and he'll get back to you. And that's his number if you need to call him, 786-732-4656. Okay, this is just a graphic. We're going to see a lot of charts. This is just a graphic of what the SPY Super System looks like. The main function of it is to track institutional money flow. So we'll show you how important that is, because when you're looking for high probability trades, knowing if the institutions are in the trade or not in the trade is one of the #1 criteria that you need to have. And this SPY Super System does this for us, and it separates us from most other retail traders who don't have that information, and it's critical information. Okay, this is kind of a graphic presentation of a text alert service. We tend to send out text alerts and SMS alerts. I'm on this service so I can see how quickly they come, and they've been coming really quickly lately. 3 or 4 seconds by the time I enter them, they get to my phone in about 3 or 4 seconds. All right, so that's another for folks who can't obviously be in the room or don't want to be in the room, or they have to work, but they would like to do some trades. All right, now first thing I do, and everybody who's been here heard me before has seen me go over this, but I want to, again, for anybody new, I want to cover this because this is really, really important. You know, what drives the market? What moves markets? When you see stocks trending up or trending down, what's actually doing that? And these little marbles here, this is us. We're retail traders, and it's important to understand that as retail traders, we don't have any ability to move the market. We don't create trends. We can't reverse trends. We're just in there, and if we're in the trades and the institutions, which is represented by this big marble, if the institutions aren't in there in any significant way, what I mean is they're always in there, but they're not in this in significantly pushing a stock one way or the other. In other words, when you have a lot of institutions all buying a stock or selling a stock, you're going to get a trend. When they're mixed, you're not. But when the institutions are in the trade, that's when the market moves. When they're not in the trade, it's just us retail traders, and we don't want to be in the market when retail traders are the only ones in there for the most part. In other words, there's no institutional directional trade. All we're going to get is chop, and we're going to get chaos, and this is not a place where you want to be trading. So it's important for us to understand when the institutions aren't in a trade to sit back and watch. And we do a lot of that. We do a lot of sitting on our hands, waiting for opportunities to set up. Right? So this is what drives the market. These are the institutions. These are Goldman Sachs, JP Morgan Chase, Morgan Stanley, all the big investment banks with their trading desks. That's a small portion of it, and their algos. They all have algos, lots and lots of different algos, identifying different setups in the market. They read news, they trade off the news. If you've ever seen the market react, for example, to the jobs report on a Friday, or the FOMC when the Fed comes out with an interest rate hike or drop, if you watch the market, the Fed announces at 2 o'clock on a Wednesday, 2 o'clock in the afternoon. If you watch the market, you're going to see at 2 o'clock in a millisecond, the stocks are going to, the institutions are going to be in there, and the SPY is going to be flying up or flying down. There's no way that humans can actually react that quickly. So when you see those kind of movements, those are algos that are pushing the market based on the news that they've read. And they also trade off of things like what retail traders, a lot of retail traders use. They'll use a MACD crossover, for example. They'll identify MACD crossovers in the algo. They know that retail traders are looking for that MACD crossover. They'll create the MACD crossover, and then they'll drive it back down again. In other words, they're basically taking advantage of retail traders by knowing what they're looking for and then busting it when they get in. And then algos do a lot of that. So if you've ever had that happen where you get failed breakouts, etc., that's what's happening. All right. So we and again, the institutions also include hedge funds, hundreds of hedge funds. They include pension funds, and they include mutual funds like T. Rowe Price, Vanguard. Those, all of those make up the institutions, and there's what drives the market. And our job is to identify when they're heavily into a trade. All right. Now in the room and in the alert service, I have a couple of rules to trade by. Pretty simple rules. Trade the best, skip the rest. Sounds really easy, but it's not as simple as it sounds. But this is what we do. We're going to trade the best by looking at specific criteria. And when we get a setup that we like, we're gonna take that most likely. It just kind of depends on what the market's doing. So we trade the best, skip the rest. Obviously, if the institutions aren't in the trade, we're skipping them. We're not going to be in a trade that the institutions aren't in, at least at this point in time. And the second rule that I have is our objective is not to make trades. Our objective is to make money. This is very, very important, because the number one killer for most retail traders is over trading. I mean, there's quite a few errors. I've actually done a video on the 11 mistakes that traders make, but one of them is over trading, and it usually comes from boredom. Traders think that they're a trader, that they need to be in something all the time, and that's exactly the wrong attitude to have. If you skip a trade that you were thinking of taking, and that trade was going to go against you, that's just like a win. I mean, it really is like a win. So skipping the rest is really important. So again, our objective is not to make trades. Our objective is to make money. That's the whole point. And I assume that's what everybody here wants to do. They want to be profitable, but they want to be consistently profitable. And that's what we shoot to do here in the room. That's what the room is all about. That's what the alert service is all about. Okay, now maintain discipline. This is kind of important. And what I say here is learn and follow the process. There's kind of a saying that a lot of people judge their results by how much money they're up, or how much money they're down. But that's really not the proper way to do this. What you should be doing is understanding the criteria or the process that we use to find the high probability trades, and that's what determines whether you're in a good trade or not. You can have a bad trade that you make money on, and that's probably the worst thing that can happen, because it gets you in the habit of repeating that mistake. And then you can be in a good trade that didn't work. That happens. We have losses. Everybody has losses. But learning and following the process is critical. And we're going to go over that criteria. Maintain discipline and remain patient. Patience is very difficult for most traders to do. They don't want to sit and watch. Sometimes we'll go through several hours without even taking a trade, even an intraday trade, just because the market's not set up for us, the institutions aren't in there, and we're gonna sit it out. We're gonna protect our money. We're gonna hold on to our capital until the opportunity comes along for us to take advantage of that. Okay, so maintain discipline and remain patient. And again, you're going to see this word process a few times. That's the list of criteria that we use to get into a trade. Okay, so now as a profitable trader, and I mean consistently profitable, we need an edge. We need an edge over other retail traders. Keep in mind, we're not trading against the institutions. We're trading with the institutions. We're not going to take money from the institutions. We're going to take money from other retail traders. We need to be able to outperform other retail traders in the market. And that means we have better information than they do. We know when the institutions are in there, and we have solid criteria that we use to take the very best trades We have more information than they do. We're going to war with them, and we've got fighter jets and they've got pea shooters, and that's the difference. Okay, so our edges are, we have the SPY super system software. This is what tells us whether institutions are in the trade. We lean on this heavily. Then we also trade relative strength and relative weakness. Now, this is something that a lot of retail traders overlook. And I don't mean RSI when I say relative strength, relative weakness. Relative strength is if you're looking at a stock, like say you're looking at Tesla, and you want to go long Tesla, you're going to have a much better shot going long if the SPY is going sideways and down and Tesla is moving up, or the market's going sideways and Tesla is moving up, stacking green candles. That's relative strength. You're comparing your stock that you're interested in, your ETF, you're comparing it to what the market's doing right now. And then you take stocks with relative weakness to the short side. This is going to increase your edge. It's going to give you a much better chance of making money, because if the market turns against you, your position is not going to go against you anywhere near as much as it would if you didn't have the relative strength, the relative weakness, because that's a big edge. So we do that. Then we want to trade with the market trend. Now this is what I call context. What's the market doing? What's your stock doing? What's the market doing? But what's the market doing on the 5-minute chart? What's the market doing on a daily chart? Right? Because daily chart's very critical to getting into trades. So if the market's trending up or trending down, then we're going to go ahead and try to stay with it. If it's trending bullish, we're going to try to take long trades. If it's trending bearish, we're going to try to take short trades if they line up. So we want to trade with the market trend. If they're choppy, it becomes much more difficult. In a choppy market, which we've had a lot of lately, a lot of volatility in the market, what you do is you find the highest probability trades, but you keep your size down and you take profits quickly. You don't try to sit there and let the thing run, because the market's not going to do that. It's just going to bounce around. So you want to take profits when you can. And the last thing is to buy near support and to sell near resistance. This is really important. This tries to keep you away from FOMO, fear of missing out. If you look at a stock in the morning, it's stacking green candles one on top of the other, and you're sitting there watching it, and you start to feel like I'm losing money here. Emotion starts to set in. That's FOMO. That's fear of missing out. And typically, when you finally crack, you jump in right near the top, and it reverses on you, and then you got to wait for it to go all the way back down. And you know, how far down can it go? If you let it go back down to the support level, that could be a long way down. Whereas if you just waited for the pullback to take place and have it pull back to the support level and then bounce back up into the original trend, that's where you get in, that's where you make the money. And the people that get in at the top are basically licking their wounds at that point. Okay, the Compass system, which is now called the SPY super system, the Compass system has been enhanced with some scanners and things like that. So we call it the SPY super system, but it identifies the highest probability trade setups, while sidestepping setups that look good will fail more than they succeed. And that's trade the best, skip the rest. That's where that comes from. It does this by identifying when institutions are driving a move and when they're not, as we're going to talk about. Very important, one of the #1 criteria. It analyzes complex trading data and displays the results in easily identifiable visual format. And this is really important because it is looking at a lot of complex data, but it's presenting it to you in the SPY super system, so even novice traders can see whether institutions are in the trade or not. Okay. Again, we're getting an edge over other retail traders. We're only taking trades that are being driven by the institutions. We keep coming back to this. This is critical. Most retail traders don't know if institutions are in the trade or not. Our software gives us a big leg up on them. It's very accurate to determining if institutions are in the trade or not. Listen, nothing's 100%, but this gives you a big edge. We trade stocks that have relative strength or relative weakness, as I mentioned, versus the SPY or the Qs, and we trade in the direction of the overall market trend if there is one, right? And how does it give us an edge? Well, obviously our trades are going to be supported by institutional buying and selling, and that's what we want to do. We want to ride the coattails of the institutions. The stocks are going to be outperforming the SPY or the Qs, either to the upside or to the downside, and they're going to be moving in the direction of the overall market if there is a direction of the overall market. All right, so a lot of things to consider here, but again, if the institutions are in pushing a trade up, that's the #1 thing we want to have. I'm going to just kind of show you quickly. We're going to get to this in a little bit later, but I wanted to just bring up on the screen what the SPY super system looks like with the criteria that we use and how we use them. And it's looks a little busy, but it's real. This isn't really not. Basically, these are our main indicators right here. This is the long-term trend. The colors can be red or yellow for short and green and blue for long. That's all you need to know. This is a long-term trend. This is a multi-time frame momentum. This is momentum over multiple time frames. And again, this is a critical element, and this is a critical element. For swing trades, if you're looking for a swing trade, you look at the multi-time frame momentum on a daily chart and the current time frame momentum on a daily chart. They need to be aligned. They need to be blue or green for long and red or yellow for short. If this was a daily chart, you wouldn't take this trade because you've got red on the multi-time frame and blue on the current time frame. Okay, they're mixed. There's no the institutions are stepping into the current time frame, but they have not stepped in a multi-time frame basis yet. All right, and this is the actual oscillator that generates this momentum indicator. It's a gear, but it's got the divergence stripped out. It's just pure momentum, right? And this is what we use. And you can I like I didn't used to have the oscillator on the chart, but I like it because it gives me an idea when this goes from like red to blue. It's showing from bearish to bullish, but you can get an idea of how bullish it is based on the slope of this oscillator right here. And those are all the indicators we use. Then on the chart itself, this is the key indicator right here on the 5-minute chart. This would be for 5-minute trading. This is the VWAP, the volume weighted average price, something you should be using religiously when you're trading intraday. You don't want to be taking stocks long that are prices below the VWAP. You don't want to be taking stocks short when the price is above the VWAP. All right. And this is the 15 EMA. It's actually a 15 EMA of an EMA. It's a smooth EMA. This is another support resistance level. This is a main support resistance level for 5-minute trading. This is the other support resistance level. And this pivot point here is a pivot point that the SPY super system puts on the trade. I don't trade off of it, but it's extremely strong resistance and support when you're in the trade. And I use it when I'm in a trade to identify when I'm getting close to where I want to start to get out. I have to watch to see if it pulls through there. And you can see how when it's this on the Qs right here, it came down to the pivot point and just kind of bounced around it. That is becoming support. All right, and so those are the main indicators that we use, and this is what the SPY super system has showed you. If you buy the SPY super system, you get this. They'll install it on your Thinkorswim platform, and it'll look exactly like mine, along with all the scanners that come with it, etc. They'll put it on there. You don't even have to worry about it technically. And if you buy the software, of course, you get all the updates. You get all of the if there's any problems with your software, they'll fix it for you for free. Very nice piece of software. I've been using it for several years. Okay, now there's something new. I haven't said this before, but this is something I kind of want to get across to everybody. The SPY super system is a great piece of software, and we use it in conjunction with all of other criteria. But for people who are learning how to trade or trading, what I'm trying to do here is say the process comes before profits. If you learn the process, which is learn the criteria, use the criteria for your identifying stocks that you want to trade, this is what's going to lead you to profitability. A lot of people focus just on their P&L, and they think if they're making money, they're trading well. But that's not the case. So you want to learn the criteria and the strategies, and they must come before focusing on results. Don't focus on your results when you're learning the process. The results, frankly, they don't matter. I mean, it's nice to have green instead of red, but once you get this down, then the results the profits will come later. And again, focusing on results, like the P&L, for example, without having a solid process to follow, is going to end in failure. And this is really important. Not trading a P&L is one of the things that I listed as one of the major errors that retail traders make. Watching how much they're up or how much they're down on a trade. When you get into a trade, you should be getting in based on technical setups. When you get out of the trade, you should be getting out based on technical setups. Not how much money you're up or down, not how much of a percentage you're up or down, just the technicals. So you shouldn't be looking at your P&L. One of the best pieces of advice I ever got when I first started trading full time was a seasoned trader who'd been profitable for years and years told me what he does is to look at his chart And when he's trading, he treats it like it's a video game. He's looking at the colors, the reds and the greens, and what he's trying to do is beat the other retail traders as he would a video game. And he's not looking at his P&L. He's just trading strictly off the video game. If the stock is set up in this direction and it stays like that, it stays above support, he stays in the trade. He's not looking at his P&L. So that helped me. I don't know if it would help you or not, but that's how I keep from looking at my P&L. And so I don't look at my P&L at all until I'm ready to exit the trade. Okay, so again, process before profits. Now here's the basic high probability trade setup funnel. This is the process. This is the process we use. The first thing I look at when I'm going to take a trade, unless it's going to be like a really quick intraday trade off of it, just a 5-minute chart, I look at the daily chart. If I'm going to go long a stock, the daily chart has got to be bullish. If I'm going to go short a stock, the daily chart has got to be bearish. I'm not going to trade against the daily trend. All right, really important, because it takes away all your flexibility to stay in the trade once it turns against you. And you certainly can't hold it overnight. You can't hold a stock long overnight if it's got a bearish daily chart, because it's more likely to go down. And then you look at the 5-minute chart to align your setup here. And then look at trade with the trend, both stock and market. This is the context. You look at the market direction on the 5-minute chart and the market direction on the daily chart, and determine what the context is of that market right now. Are we bullish? Are we bearish? Are we choppy? Are we neutral? That makes a difference. You want to be able to trade in the direction if there is one. Okay. Then we use the SPY super system. They must align. And as I said, if you're trading swing type trades, the multi-time frame momentum and the current time frame momentum have to be bullish for long and bearish for short. They've got to align up. This is critical. We can't take it. If this isn't the case, we can't take a trade. Now, if you're in a 5-minute trade, where you're doing just a quick SPY super system trade, for example, off the Qs, the SPY or the IWM, or you're trading futures, then you're just going to look at the current time frame momentum, and you don't even need to look at the daily chart when you're trading that quickly. But typically, most people like to trade longer term trades, and that's when you need the multi-time frame momentum. So this has got to align. So if this is true, and this is true, and this is true, then we look for relative strength and relative weakness. Maybe you get 5 or 6 stocks that meet this criteria. Then take the ones that have the best relative strength or the best relative weakness, depending on the direction you're going to go to. Once you've got that, then you want to try to enter near support and sell near resistance. Right? So that's criteria. Now, a lot of times what I'll do is if I like a stock and I'm not very close to support or resistance, I'll put an alert there. And when the stock gets to that point, my software will alert me to that fact. All right, so this is the high probability trade setup funnel. This is the process. This is the process we go through to find high probability trade setups. And again, it's just written out as opposed to the funnel. Stocks to be traded should have the daily and 5-minute chart aligned, especially for this. This is true for what I consider swing trades, which would be a trade that you're going to take for 5 or 6 hours or overnight or 3 weeks. Those are swing trades. You got to have the daily chart line up. And the SPY super system indicators must align in the direction of the trade. Right? It's very critical that they align in the direction of the trade. Relative strength, relative weakness. Now, as I said on the 5-minute chart, when you're taking a stock, if you're going long, you want the stock price to be above the VWAP. If you're going short, you want it to be below the VWAP. And typically, you want to enter somewhere where the stock is just going up through the VWAP for a long or coming down through the VWAP for a short. You're getting in at a very good support and resistance level. All right? And have patience. Really, really important to have patience. Okay. In the trading room and the alert service, these are the strategies that we use. We've got different strategies that we can use, and you have to have multiple. You have to have a whole tool belt of strategies that you use, because you're trading in all different markets. This market has been, if you haven't noticed, extremely volatile. With the tariff talk, tariffs on, tariffs off, tariffs on, tariffs off. The market's jumping around massively, big, huge moves, big gap up, big gap down. Very difficult for swing trading. Very difficult for swing trading. Wasn't this supposed to be a Heiken Ashi webinar? Yep, Robert's coming up in just a minute. As soon as I just want to recap what we do in the room, and then I'm going to go directly into Heiken Ashi, and we're going to spend some time on Heiken Ashi candles and how to use them in trading. So these are the strategies that we use, fairly straightforward. Calls and puts, straddles and strangles, Debit spreads using weekly option expirations. I have videos on all of these strategies. Time spreads over earning. This is a non-directional trade to collect volatility crush, which we did this week. And I have another strategy. We only use this weekly ATM strategy to sell puts week after week against a neutral or bullish stock. Can't do that right now because the market doesn't give us that. It's not giving us that kind of a support. We'll do credit spreads. And then we also do inside the room a thing called the SPY super system. These are very high probability trades to catch the SPY moves or the Qs, or you can use them for futures. And this would, these are very, very quick trades. I can't post them in the room, but I can let you know when they're set up. We can't alert on them, they're too quick. But a lot of people like to take these kind of trades. So that's why I entered this into here, and we'll show you how that works. All right, and the alert service, just so you know, it's designed for day trades and short-term swing trades. This is not a, this isn't an investment business. It's designed for traders who can't watch the market all day, and you're gonna get alerts on the real-time alerts on the highest probability trade setups. Okay, and we do that, of course, by looking for institutional involvement. We look for market internals, and then we do additional technical analysis. All right, and that's how we come up with the highest probability trade setups. This is just the equity curve. This was actually last year of the alert service. This is the recent one. We've had really good run here, especially with the SPY super system. This includes SPY super system trades, by the way, which are trades that I took. So the results for SPY super system trades refer to the results that I had, because I can't post them. I can tell you how to do them and I can tell you when I'm getting in, but everybody's responsible for their own SPY super system trades. That's really important. Now the other trades, all the ones we post, which are longer term day trades or swing trades, those all get posted and those goes in the alerts. So the results from those will be the same for you as they are from me. All right, now let's going to talk about Heiken Ashi candles. I know people want to talk about this. We're going to talk about it up front here. We're going to go into some detail on it. And I'm going to look at some charts. We'll look at some charts from yesterday, actually from Thursday, on when the market was open, and we'll identify some Heiken Ashi setups and show you how we use them. All right, so trading Heiken Ashi candles, we're using the SPY super system. All right, here we go. Now, this is just kind of a graphic that says British pound, Japanese yen, doesn't matter. What we're interested in here is the candlesticks. Candlesticks that are Heiken Ashi candlesticks, and that's what these are. These are Heiken Ashi candlesticks are going to look different than regular candlesticks because of the way that they're calculated, the way they're constructed. You notice here that these are bearish. These are bearish Heiken Ashi candles. Our bearish Heiken Ashi candles have flat tops. There's no wick on the top of a bearish Heiken Ashi candle, and you can see how you get flat top, flat top, flat top. This is a very bearish trend, and the Heiken Ashi candle identifies that very nicely, that this is a trend. Now, if you're using Heiken Ashi candles, it's going to eliminate a lot of the noise that occurs on like 5-minute candles that happen. So if you can just stay in the trade, you can stay in the trade until this breaks, right? And you notice that each candle begins in the halfway point of the previous candle because of the way these are calculated. They're always going to show up halfway down the previous candle, just like that, every single one. Now, what you're looking for, and the way you use these in your trading is, obviously you can use it to stay in a trend. You can see chop, but the key thing that I use it for is to find Heiken Ashi reversals. When a stock is bearish and it reverses to bullish, I use Heiken Ashi candles to find that reversal and to use the Heiken Ashi candles to give me confirmation that the reversal is true and it's going to go back into the original trend. So if this is short and I want to be long this, I'm waiting for it to come down, and I'm waiting for it to come down. Now you start to get little tiny wicks here, but notice it starts putting in a wick and a tail right here after this flat top. All right, so we're getting a lot of chop here, and these are turning green, but this is not a reversal. Now this is a reversal, but I have a caveat here. See the flat bottom? Bullish candles have flat bottoms, just like that, just like that. But when you get a real reversal, Heiken Ashi reversal, you want the bullish candles, after coming from in a downtrend, you want them to be large enough to justify taking the reversal, because these were really big candles and these are really small candles. So likely I wouldn't take this. I mean, you could, and you're going to get a little bit of a profit out of it. What I look for is basically it's moving up, it's chopping around. Now I get a flat top, bearish reversal. bearish reversal, wick and a tail, bullish reversal right here. See, the bottom of this candle is flat, all right? That is a Heiken Ashi bullish reversal, and look at the size of the candle, all right? This tells me that this downtrend has now been reversed and it's going back into the uptrend. This is where I look to get in right here on this flat bottom. And the interesting thing about this is you can actually take them before the actual candle completes. If this is a 5-minute candle, if you wait about 2 minutes into the construction of that candle, that is likely going to remain a flat bottom candle. It usually does not reverse after that. So you can kind of get in them as they occur. So I would try to get into this right through here. If I didn't see it, I'd get into it right here if I hadn't been watching it. So here's a Heiken Ashi reversal. Here it is, flat bottom, flat bottom, flat bottom, flat bottom. This is your trend, bullish trend based on these Heiken Ashi candles. Starts to show a wick and a tail. So now you're kind of watching it to make sure it's not reversing on you. But then you go right back to a Heiken Ashi bullish candle. This is called a Heiken Ashi continuation because you go from a flat bottom to a wick and a tail back to a flat bottom. It's a continuation. And this is where you would get out as you start to get red candles at the top. Okay, so this is what the Heiken Ashi candles look like. This is what you're going to look for. Now on your charts, all you have to do is switch your candle setup from candlesticks to Heiken Ashi. You can flip them back and forth, and you can do that on Thinkorswim. You can do that on any charting program that you have. All right, so the Heiken Ashi candles. Now, as far as using these things, if you haven't used these in your technical analysis, you may want to try using them. All right, because I think for entries, they're really, really good. Heiken Ashi candles means average bar in Japanese. It smooths out the price action. So identifying trends and reversals is clearer since they eliminate a lot of noise and make it easier to see trends and stay in the trend throughout the trend, allowing for improved profits. In other words, you're not going to get shaken out of a trade as quickly if you're watching Heiken Ashi candles than if you're watching a 5-minute candle. All right, it's just you wait for the candle to close. Again, bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. This is the most critical thing to remember, right? This is so you can identify those things. Again, bullish trends will have flat bottom Heiken Ashi one after another, and bearish trends will have flat topped Heiken Ashi candles one after another. Okay. And again, the reversals, as I just showed you, is you're going to have, if you have a reversal, you're going to go from a reversal from a bullish trend will have flat bottom Heiken Ashi candles, followed by smaller doji Heiken Ashi candles, and then followed by flat topped bearish Heiken Ashi candles. That's going to give you the reversal. That's what you're looking for, right? Okay. And again, once you have a valid Heiken Ashi reversal, the first thing that needs to be true is that the Heiken Ashi candle height has to be at least as large, preferably larger, than the prior candles that occur to the reversal. In other words, you want the trend to show some strength. You want to see some large candles reversing that previous trend, right? Because you don't want to be entering on a small little Heiken Ashi candle because it may not last. You don't have as much force as you did when it was coming down. All right, if you get a small Heiken Ashi candle, then you want to wait for at least one more that's going to be larger to confirm that it's reversed. But once you get a big one, like I showed you on that other chart, then that's a good entry point. When you get a long Heiken Ashi candle coming off of a reversing a trend. Okay. And again, this should be on stocks with relative strength and relative weakness. This just goes back to the fact that once you get a Heiken Ashi reversal on a trade, on a stock you're looking at, you want the other criteria to be in place. You want to have relative strength, relative weakness. You want it above the VWAP, etc. You want all of those things to be true, and you also want the SPY super system to indicate that it's bullish if you're going long and bearish if you're going short. You want those indicators to be letting you know that the institutions are in the trade. If you're going long, that they're bullish, they would be blue or green, and they would be red or yellow if it's bearish. You want to make sure that situation is also true. And I'm going to show you some of those on some 5-minute trades that we took on Thursday, and I'm going to show you some on another charting program I got called TC2000, which I can actually show you. It's easier to see the Heiken Ashi candles there. All right, so again, this is just kind of a recap, and you'll get this when you get the copy of the webinar. We don't have to go through every one, but they do combine open close data from the previous period with open high low close data from the current period, and that's why they always start in the middle of the previous candle. All right, and this fusion minimizes the market noise and provides a clearer depiction of the trend, which we just covered. And again, this Heiken means average, and Ashi is pace. It's the average pace. This is in Japanese construction. Okay. All right. Again, here we go with understanding trends. I want to reiterate this again because I'm going to show some live trades, and I want you to be able to remember this. All right. These are flat top candles here. These are bearish, right? And you see how we get these little candles that chops around here? Still chops around. This was a fairly strong trend. You probably could take it here, but if you're running into, like, say this is a VWAP, you want to wait for it to break above it. But here we're getting a nice reversal. We get some nice green candles with flat bottoms. That's a Heiken Ashi reversal. Now it comes up, and when you get one candle like this, if you're above this blue line, for example, if that's the VWAP, you can stay in the trade because that becomes your stop, right? So your stop would be the level that you went through. We'll talk about this in more detail. But this is a nice Heiken Ashi reversal, and you can see the trend in this thing and how nice a move that was. And you obviously, when you see something like this, you start to watch to make sure it isn't breaking down. A lot of people would take profits right here. You get a little bit of a move, but then you definitely want to exit here when you get this flat pop. That's a Heiken Ashi reversal candle to the downside. You're out of this trade, but you made nice money on this thing. Okay? And we're going to go into some live ones you can see. Manny says my sound keeps cutting out. Anybody else having sound problems? I got my mic on. I haven't had to get any indications of any difficulty. My sound okay now? No audio issues? Okay, thanks. Appreciate it. Thanks, Carl. Okay, now, again, tips for using Heiken Ashi. This just basically falls into using the process that we use, the criteria that we use when you use it Heiken Ashi. You just don't use these willy-nilly. You just don't use them by themselves. No one indicator is going to give you to be a profitable trader. You've got to take them in conjunction with other things. But so then you want to examine support and resistance levels impacting potential gains. You don't want to be getting into a trade that's running right up against resistance if you're going long. Align the trade with the current market trend for increased success. Choose a stock with relative strength and relative weakness, and stick with the market trend when trading indexes. This is all very key. This is all a process. This is the criteria that we use to find these trades. I also monitor the Bollinger Bands, and I'll show you how I do that. If the Bollinger Bands are expanding, it tells you you're coming out of compression. And after I enter the trade, once I'm thinking of getting out of the trade, I switch to standard candles. When I feel like I've got enough profit, I'll switch to standard candles so I can catch the reversal more quickly. Okay? All right, so this recaps the advantages of Heiken Ashi candles. It smooths out price action, reducing noise. This is very critical. Noise is one of the things that really can drive retail traders crazy, because they get into a trade and it's a great trade, but there's too much. They get into a bunch of chop and they get a big red candle stuck in the trend there somewhere on a 5-minute chart, and they get out. I mean, they don't want to lose money. So Heiken Ashi candles will help you reduce the amount of motion that's in your trades. It makes identifying trends much easier. It improves identifying confirmation of trends and trend reversals. Obviously, this is critical, and this confirmation is important. When you get into a trade that's breaking out of compression, for example, breaking through resistance, you want some way to confirm that's not a false breakout. And if you use regular 5-minute candles, you're going to get a lot more false breakouts than you do if you use Heiken Ashi candles, because a Heiken Ashi candle by itself, because of the way it's constructed, is a confirmation of the breakout, right? Because it's got 2 candles in there to create the breakout. So it is confirmation of the breakout. And again, it helps identify potential exits when the candle bodies shrink or the reversal occurs. So those are the basic criteria of why using Heiken Ashi candles are good. This is an old chart, but I just wanted to show you. This is Uber. This is a regular candle chart right here. All right, so here's Uber, and you see the gap here. What you're going to notice, Heiken Ashi candles do not have gaps on them. All right, but here's the gap on Uber. So this is what you're looking at. All right, if we look at Uber and Heiken Ashi, here's the same trend right here. The gap, and here's the move here. We got the Heiken Ashi reversal. See the move to the downside here, and then a wick and a tail, and you see the flat bottom right here, okay? That's a Heiken Ashi reversal candle to the upside right there. That would be your entry to get into that trade as it bounces off the 100-day moving average. That's what this blue line is. And then flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Still flat bottoms, but the candles are getting small. Is your exit right there. All right, so that's what Heiken Ashi does for you on those. This is what it looks like on the without the Heiken Ashi candles. All right, so I'm going to look at some Heiken Ashi reversals from Thursday's trading. The first thing I'm going to do is I'm going to go to Thinkorswim. All right, and this is Thinkorswim. This is the SPY Super System software right here, and this is with some of the scans that we have up. This is looking from relative strength, relative weakness, new yearly highs. But I'm going to move those out of the way so we can look at the chart a little more closely. All right, so this is this week. All right, this is this week. This is a 5-minute chart of the S&P 500 right here. All right, so this is what we use for doing SPY Super System trades, for example. Here's the pivot point right here. Here's the pivot points white, the Heiken Ashi reversal candles I'm going to show you. That's what these are. And this is the VWAP right here. Again, we don't want to trade long below the VWAP. We don't want to trade short above the VWAP. So let me just go back a ways and find a couple of trades that were pretty decent. Now, there was a couple here on Wednesday. And if you notice the chart here, these are Heiken Ashi candles, but you see how flat this chart is. This is a no trend. When I talk about looking for the SPY in context, this is the context. This SPY right here is flat. You don't want to be messing with this, right? And the SPY Super System, you can see that it's right along. It's just riding along the VWAP. It's not going anywhere. These are pop out of the box symbols that are produced. These are showing compression breaks to the upside, compression breaks to the downside. But this is flat as a pancake. Now, so on this trade right here, now notice the current time frame momentum here is red. All right, it went from buying to selling right here, but we don't really have a breakdown. So I don't touch this until I get a breakdown. It stays red. This is selling is taking place. Here's the breakdown below the VWAP right here. Here's the VWAP, volume weighted average price. This is an entry for SPY Super System trade right here, right? And you see this has a little bit more force to it. The candle's bigger. It's got some force to the downside. This, as it turned out, was when Jay Powell was speaking, that's where this is the trade I took. You could take it here, you could take it here, and then you run it down, and then the candle gets small. You take it out. Not a big deal, but this was about a $90 a contract profit right there in that little run like that. And then you get out when it starts to show you it's time to get out. And then it comes back here again, and you notice we flatten out. We get this crazy candle here, and then we get a Heiken Ashi candle right here to the downside. Now the red line here is the 15 EMA. That's the other SPY Super System criteria we use for an entry. Right, this is a support resistance level. It breaks it right here. You take it here. You ride this down, and you get out as soon as it starts to go back up above the 15. Once you get in here, the 15, which is your entry, becomes your stop. If it goes above the 15, you get out. As long as it stays below it, you can stay in. Right, and I did take this one as well, so I had both of those. And now this one is, see how this reverses to the upside. See, it went from red selling to institutions buying right here, and then it goes even buying even stronger. But you see what's right above here? The VWAP. You don't want to be trying to take these unless you've got enough room between the 15 and the VWAP. You don't want to take a trade here because there's not enough room where you run into resistance. You see how it banged into that, and then you also, this is the next morning, but this is the pivot point right there. All right, so you can, and the question is, can Heiken Ashi be used to trade NQ? Yeah, it can be. It can be used to trade anything. You can actually use this on stocks, but you can use this on a lot of traders will. If I take the SPY, they might take the ES or the MES. Or if they're taking the Qs, you can take the Q or the NQ. You can take the mini NQs or the full NQs. You can trade futures exactly the same way, no difference. Okay, so this is what it looks like, and this is what the context of what you look like. You can see where we opened on Wednesday. I'm not going to take a trade like this. This was the first candle on Wednesday. I'm not going to touch this. It's way too big. You can't. By the time you get in, you're too far away from the 15. You got to wait. But see, it comes down, and then it starts to break below the VWAP. Now you could take it here, but you got to get out pretty quickly because your VWAP is your stop, and it came right back up again. That's what choppy market conditions will do. will do to you, right? So that's how I use it on the SPY super system, which is what I use for the SPYs, the Qs, the IWM, or can you use indicators on an options chart? An options chart, Janice? You mean where an option chart shows the option prices? You know, I've never done that. I don't know. I just use the straight stock chart. I'm trading options all the time, but I don't actually use a chart for the option prices because the option prices to me, all right, is not critical. What I'm trading off of is I'm trading off the technicals on the actual stock. Option prices can move around a lot because the market makers are messing around with the bid-ask spread. They're messing around with the volatility. They change because of time decay. So I can't look at them like that. With call and put next to each other, yeah, I understand what you're saying. You can look at calls and puts. I don't know what the chart would look like when you did that. Again, when I'm looking at a chart, I'm technically taking the information from the stock prices and if the institutions are in those stocks. All right, if they're buying or selling those stocks. The options have a lot more. They have a lot more things that can go into trading options. Because if you're looking at calls and puts, if you're looking at a big volume, for example, on a call position or a put position, you don't know whether some big institution is buying puts because they want to short the stock or because they want to protect themselves against the long position that they've already got, say. Okay. Carl, Dave, the SPY IV numbers on Thursday were above 40. Is that too volatile to use the SPY super system? No. Anytime you've got, what it means is you're going to be paying more money for them. Now, there was a couple of days last week we couldn't trade it because a normal price for the SPY, if you buy SPY calls at the money, for example, that expire that day, it's usually around between 280 and about 330 in the morning, $280 to $330 a contract. Last week, with all this volatility, they were trading over 7. Now you can still, if the stock moves, you're still going to make money on it, but you've got a lot bigger risk in something like that. But above 40 is not bad. They were trading, the volatility was trading last week over 100 on a lot of those. So that didn't really faze me too much, Carl. I didn't have a problem with that. All right, so there is our Heiken Ashi on the SPY super system. Now I'm gonna share something else here as well. Let me put this down, and I'm gonna look at some Heiken Ashi candles. This is TC2000. This is a piece of software I use to chart. I don't do trading off of this. I don't look for institutions off of this. I just use this for charting, but it's easy for me to find Heiken Ashi candles on here. All right, so if I go in and I look, just randomly put in a stock, and this is a daily chart here I think it's a daily chart. There's a daily chart on Tesla. These are regular candles on Tesla. If I switch to Heiken Ashi, it's going to give me a lot of chart, but you can see all these wicks and tails. When you see this kind of crap on a stock, you don't want to be trying to trade this thing as a swing trade. This is just crazy. All these wicks and tails on here, because you're going to get the same kind of price action if you're looking at the regular candlesticks. And this was the tariffs on. This is the tariffs off. Big, huge green candle. These are huge candles. So I'm not going to touch that. But if you look at the Heiken Ashi back here, you see this reversal here. This is an 8 exponential moving average. But see how this went to a flat top. All right, and I color my candles pink when the Bollinger Bands are expanding for the downside to tell me the compression is breaking, and I color them blue when there's an upside break of compression. But this right here was a perfect trade for Tesla to the downside as a swing trade. All right, very nice swing trade. Right, you probably would have got out in here, but it was a nice swing trade. It did come to the 200. So, okay, so let me just look at some other ones here. People may be interested in. Anybody has any stocks they'd like me to look at? Just type in the symbol. All right, this is an Apple. And again, this was the tariffs. So these candles are huge. Very tough to trade this kind of thing. But you can see Apple's been kind of a downtrend here for a while. This was a decent swing right there. This was a swing to the upside. All right. There's another swing to the downside. You can see very easily with the Heiken Ashi candles how easy that is to identify. All right. Janice wants Palantir. All right. A lot of people liking Palantir. All right, so here's Palantir right now. This is let's look at it on a regular chart. Regular chart right here. Choppy, choppy, choppy. Very, very choppy. See, I'm not trading something like this. This is the 50-day moving average, and Palantir just got above it. But I've got some other resistance levels in here, but I'm not trading this long right yet. I've got to see some confirmation. And if I switch over to Heiken Ashi, we did get a Heiken Ashi reversal here, and we got a little bit of a move to the upside. So if you were trading off of that, you could have done it, but the daily chart to me just isn't good enough to do that. This was a good Heiken Ashi reversal to the downside right here. Right, so that's Palantir. Yep, somebody else wants Palantir. What's that? AU? Doug's looking at gold. All right. So listen, gold has been extremely strong. All right, here's a daily chart on AU, which is one of the gold stocks. Right. So here's your Heiken Ashi reversal right here, and for me, this is the 8 exponential moving average. This is the 15. This is where I take the trade. Here as it breaks above the 8 exponential moving average. You had a nice move up, and you're out. When it does this on Thursday, you're out. If I look at the regular chart, you're going to see it clearly. But this is what, notice the gap up, a lot of gaps in gold. This has been extremely choppy. This is an all-time high in gold right there. All right. So if you can see that on GLD, but GLD worked about the same way. All right. QBTS. QBTS, yeah, QBTS. I'll take a couple more of these, and then we want to get back to the presentation. Here's QBTS right here. That's quantum stock. These quantum stocks have been very, very volatile. It's QBTS right now. You see this blue line? That's the 100-day moving average. It's bounced off it a couple of times, but it hasn't been able to give above the 50, which is right here. This is wedged right in between 2 moving averages. For me, for criteria-wise, this is not a good trade. It's got to either break below the 100 and confirm below it, or break above the 50 and confirm above it. And here's your Heiken Ashi on it right here, right? Just kind of chopping around. But you've got to take other things into consideration when you're looking at Heiken Ashi. Where are my support resistance levels? Okay. You want game, Peter? Penny stock? All right. Don't trade a lot of penny stocks, but there's game. Choppy, that's regular candles right there. Very, very choppy. You know, you see these wicks and tails on regular candles. When you get a lot of wicks and tails, this is a lot of volatility. I mean, they shot it way up here, 75 cents, and then the sellers came in and started selling it. They brought it down here and the buyers came in. This thing to me is in no man's land. Nice little downtrend here, and starting to do a Heiken Ashi reversal here, but you got a lot of chop, and that was probably earnings right there. All right. Can you, Ian, can you use for scalping NQ in the 5-minute chart? Absolutely. Most of the day trades I take are off the 5-minute chart, and I'm looking for Heiken Ashi reversal candles going through a support or resistance levels. Okay. All right. And how do I get pink candles, Janice? Well, TC2000 is a charting program that I own, that I've owned for about 20 years. And you can color the candles based on Bollinger Bands expanding. That's all I do. I go in there and put a criteria. If the Bollinger Bands are expanding and the stock price is moving down, it's pink. If it's moving up and they're breaking, I change it blue. If they're just they're yellow or red, that means there's no compression break in the Bollinger Band. All right. And let me just look at a couple of others right here. Here's MSTU, for anybody who likes to trade MSTR. This is a cheap version of MSTR. It's much cheaper than trading MSTR, but it reflects the same thing. Right? Here's MSTR right there. See, it's come down, come up. This is a Bitcoin stock, very, very choppy. Amazon, again, Amazon is weak here. You see how you got a flat top, flat top, flat top. This is selling off. So we got to look at the daily chart and see where we're at as far as support and resistance levels are concerned. And here's your chart, and you can see we're just trading inside this range right here, right? There's no trend to this stock at all. And well, man, let me show you the SPY, just so you can see what the SPY is doing. Why is it so hard to swing trade right now, right? Because we had this big correction, and then a lot of chop, And then when the tariffs started coming along, now even during this correction, by the way, as the stock, if you got these big pink candles breaking down, followed by a green candle, you got short, you got stuck. You got short, you got stuck. All right. So what happened here is if you get short again, you get stuck again. Now, as it moves back up here, people start to get long, and then you get this flush down. So you're getting, see these gaps? These kill you when you're trying to do swing trades. If you're short, it's great. We actually had Nike on one of these pull downs. It gave us 216% profit. But again, this is not good for swing trading. Tariffs are on. See what happened when the tariffs went off? It took out all those candles just in basically an hour. All right, just whipped up there. It's this trading right in here. All right, I know a lot of retail traders that this ended their trading career. They lost so much money, they get margin calls, and they get completely wiped out because they weren't being prudent. We were in the room, we were saying, take very few trades, don't take overnight trades. I think I only had 2 or 3 trades on it all, and we did very well with them. But this is not a time to be getting aggressive. And you see what we've done now since then? We're just trading inside of that big green candle. This is just chopped. All right. So those what Heiken Ashi candles look like. I don't want to take too much more time on those, but I did want to cover that. Yes, Dave, this is going to be recorded. You'll get it. Just started some new meds. Yeah. This will be recorded. You'll probably get it tomorrow or Monday, and you can go over the whole thing. All right. So we're going to look at some live trading candles from today's trading. We just did that. All right. That was from Friday. This is now, we're going to talk about the SPY super system. Hopefully that covers the Heiken Ashi candles, right? And how to use them in your trading, right? You have to get used to them a little bit, but you can switch back and forth. And I should show you one thing on here. These are Heiken Ashi candles on TC2000, I'm sorry, in TOS, think of swim. You just click on style. You go down to where it says the type of candle. I've got it set Heiken Ashi. I switch that to regular candles. I want to go back to Heiken Ashi. I just switch to Heiken Ashi candles. All right, that gives you exactly what you want. All right, and by the way, these scanners are great because I can just click on them and they'll bring the stock right up on the chart for me. All right. Now I'm gonna spend a little bit of time on the results that we've had in the room. Yes, it's being recorded, Ian. Absolutely. The room results we've had, again, remember I talked about process, right? Process comes before results. The reason we get these results is because we've internalized, we know the process. Those are the trades we're taking. Those trades we take, they meet the criteria of the process. Process then creates results. The results come after the process is learned, right? So here's the results in the 2023. This was in the room, putting $2,000 into each trade, and I just use this arbitrarily because I got to have some sort of a baseline. 2,000 in each trade produced a little over 60,000 in profits. All right, 2024, investing 2,000 in each trade in the room produced 55,000 in profits. A little different because of a lot of the trades you take. It's a lot of your profits are going to be dependent upon the market. A trending market is easier to generate higher profits than a choppy market. Obviously, you can't stay in the trades as long in a choppy market. All right, and I did want to point this out because this was during that really volatile period we just talked about. A week ago when we had all that wild action, the SPY was down 10%. SPY was down 10% in 2 days. You have to think about that now. A 10% gain or loss in a year on the SPY is pretty good. 10% in a day is crazy. All right. So the SPY was down 10%. These are the trades we had on. These are the only trades we had on in the room and on the alert service. We were short Broadcom, AVGO. We get in for $75 a contract, 75 cents a contract. We closed it for $1.04, 39% profit. So 2,000 invested produced 754 profits. We had Nike. This was crazy because remember when the tariffs were announced, Vietnam was getting smacked with like a 35% profit. Nike makes all their shoes over there. We entered for $285 a contract and we closed it for $9. Some folks get out, close it for $385, but I closed a couple of them for $385. But all I had left on I kept in it, stayed in it overnight, and get out for $9. So that produced a 2,000 trade produced 4,300. That's our best trade this year. Probably the best trade in 2 years, because we don't make these big profits like this. This system isn't meant to try to capture 200, 300, 400% gains. It's meant to squeeze out 25, 30, 35, 40% of trade, right? And then we had Sarepta, entered for 450, closed at $8, $1,400 for 2,000 investment, a 78% profit, and NNE, again, short NNE. So we were short across the board on these right here, right? And we got lucky with Nike. I mean, that tariff thing really hit that one bad. But Sarepta went down, NNE went down. So those are the only 4 trades we had on. Those are the only ones we closed. That's it. We didn't have a lot of trades on. And I get a lot of talk during the week from people who want to have more trades. But I try to encourage people, when the market was like what it was doing, we have no direction. Just keep your money in your pocket for the most part. All right. So let's quickly run just through the 2024 trades. This is January, and really reason to show you this is, it does show you what our win rate was and how much we made, but I want you to focus on, this is the kind of profitability you can expect from the trades we take, all right? You're not gonna get 400, 500%. I'm sure you've gotten emails that tell you you can turn $500,000 to $5,000 into $5 million. You can't, right? So these are the results that we had with the SPY Super System, trading in the room. 20 wins, 2 losses, 7,500. February last year was our best month of the year. 92% win rate, 11,745, and the alert produced 6,930. And again, I'm not going to go into all of these, but this is what I'm trying to point out. We do have losses, but most of our wins are going to run 20, 50, 26. We did have, I think we had 96 in Boeing here, but typically they're small, 30%, 35%. It sounds like small, but think about 30% on your money in a day or a couple of days. That's a huge return. When you compare that to what you're getting in a CD, it's crazy. Okay, this was our May trades. We did some time spreads on stocks that had earnings, but again, 24, 20, 28, 25, lost on BKE. This was a time spread that the stock jumped crazy. They had some news. But again, you can see the percentages remain about the same. Win rate stays between typically about 85 and 90% most of the time. Okay, it's June, and again, I'm not going to go over all of these. We've had good results. I mean, obviously, we've had good results. July, this is the worst month in the room. 12 wins, 4 losses, 75% win rate. Win rate still made $3,300. It made 6,000 here in July. August, about the same. This was our losing month last year. I wanted to put this up there to try to be transparent and say we did have a losing month. This is the only one, but this was our losing month in September. 8 wins, 5 losses, 62% win rate, probably the lowest win rate I've had in the last 4 years. But wasn't very many trades. Tough month for trading. Lost 1786, lost 295 in the room. Bounced right back in October, 17 and 3, 85% win rate, 74.48. And again, 82% in the room. So this was October, all right? And this was November. So you can see the profitability here. That's, it's very consistent, very consistent. For this year, I just kind of highlighted, I haven't broken the rooms, all the trades down, but I did want to show January, 15 and 3, 31.35, not a huge win, but a tough year for trading so far. February, 3,800, 16 and 2, and March, 20 and 4, 7,800. So pretty good March. Right now in April, we're up about 4,000, but I haven't got it listed yet. All right, so those are our results. To talk about the alerts, if you get in the room, if you take a subscription to the room, you get the alert service too. This is what the alert service produces. This is like the trade we took in Nike. What you get is the stock symbol, the option strike price, the option expiration date, and the price to pay for the option. That's going to come through. Now you're going to get at least 2. You're going to get the entry, and then you're going to get the exit. And if we have to adjust the exit, you'll get one for that too. But in this particular case, this was what the Nike looked like. You get a text that says 328. That was their entry date. Nike buy the April 11th 67 puts for $285, and then the final sell order come through, sell order for $9. They were sold for $9 on April 3rd. That's what your alerts will look like. Okay. All right. And again, how do we achieve these kind of results? And I've talked a little bit about this already. We follow the process. The process is finding all the highest criteria stocks, that the highest probability stocks following our criteria. But the main thing is we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. This is a huge edge. So we only take trades when both of those are in our favor. I have to caveat that a little bit. I'll take trades when the institutions are driving a trade, as long as the internals aren't against me. I'll take them. I'll take them if they're neutral, but the institutions are in the trade, right? Okay. And again, the SPY super system identifies when institutions are creating a trend. That's part of the process. Remember, there's a process, but when the institutions are in the trade, that's a huge part of the criteria that we need. And we do triple screen assessment, as I said, on momentum and on trend. Very important. This is how we find out the institutions are in there. Let me see. Ian, do I offer any one-to-one? I don't know what you mean. Does that mean do I put trades on for other people? If that's what you mean, I don't do that. I don't trade other people's money. I trade just my own money. But everything I post and every trade that I alert on, I'm in. All right. Do I do any one-on-one training? Sometimes, Ian, I do a little bit. I used to do it a lot. I haven't really had time to do it much anymore. I would consider it for you if it was necessary. Greg, trades entered and exit during the day or outside of when we're at work. Typically, when you're going to get a trade, I'm putting it on during the day. I mean, I have to put a trade on during market hours because I can't make the assumption of what the market, how that stock's going to open in the morning. But you'll get the exit price will be given to you during market hours, and you can put that exit trade at the sell price. You would put that in, and then as long as you just put it in, it's good till canceled. And if you're working and you can't watch the market, as long as your seller is in there, if the stock hits it, you'll get closed out. But you have to put the trade in yourself when you get the alert. Okay. So again, here's the SPY super system again. Let's talk about this. Here was all the things we talked about: the VWAP, the 15 EMA, the pivot point, long-term trend, red and yellow bearish, blue and green bullish, multi-time frame momentum, current time frame momentum. This tells us if the institutions are in the trades. This is about the best that you can ever find to let you know whether institutions are in the trade or not. And this is what gives us such a big edge over other retail traders. Right, and there's your oscillator right there. And this is another new template. This template here is the basic one that I put into the SPY super system. Now I've added another one. We have this one for people who just want to trade SPY super system trades during the day on a stock or an index, just using current time frame momentum. All we did was strip out all the other stuff and just put in the one. This is what we need for doing a SPY super system trade. All right, so this is what the template looks like. Everything's there except the other indicators, but you don't need the other indicators for doing methodology, SPY super system methodology, which is just trading 5-minute candlesticks for quick ins and outs, right? Because you don't care about the daily when you're doing that, right? This was a Heiken Ashi reversal on the SPY super system. You can see right here. You see how we get compression. See how it reversed right here this is where we get into the trade. You see how it went from green buying to yellow selling, institutions buying, institutions selling, and momentum indicator coming down. This is your entry right here. It stays below the 15, you stay in the trade. There's a beautiful SPY super system trade right there. Right, and those are off the Heiken Ashi candles. You see the flat tops. The SPY super system, which is what we use this for, just trading 5-minute charts. Now this is for quick trades. These are for intraday trades. Obviously, you have to have you can't have to be under PDT. You can't be under the being a day trader where you can only take 3 trades every 5 days. In other words, if you don't have a cash account or you have under 25,000 in your account. This is mostly for folks who want to trade a lot of trades during the day, but high probability trades. And there's you're going to have a lot of trades doing this. This was our results. We started this in July, 16-0, August 56, 6-2. Again, pretty nice money. September 43-2, 7,100. So you can see that these results have been very good. Again, these are high probability trades because we're only taking them on Heiken Ashi reversal candles through this VWAP or the 15 EMA when we're trading with them, when we got a market direction to follow. All right, October 33-4. And the key thing about this is when you put the trade on, you're just going to have one trade on at a time, and they're going to be very short duration trades. Okay, very short duration. 1 candle, 2 candles, 3 candles, maybe 10 candles an hour. That would be a long trade. Typically, they only last, 4 or 5 candles. Then they reverse. It was November, 9,300, 2,000 invested. And again, we get better at these as we go along. In December, we had a lot of trades. I did. These are my trades. Now, these are my trades. I don't post these. I do tell people I'm getting into, but I can't post them. They're too fast, much too fast. Excuse me. And but I did have quite a few losses, but still produced nice 10,000. January was 10,000 as well. This month is lower down. I think I'm only up about 3,500 so far this month. All right. So this is the October 24 results. Now, the SPY Super System we just looked at here, right, had a $4,831 profit. The room itself had $74.48. These are not included in each other. This is a separate trading methodology, and these are separate totals. They don't include this. This is separate from this. So these are 2 different things. If you did all these trades the same as I did, and you traded in the room, you would have the total of those 2 added together, right? Just so you know, they're not included in there. There's November, beautiful. December, beautiful. SPY Super System. A lot of times when there's not any good swing trading, we can do some SPY Super System trades during the day. But they're very quick. You have to be fast on these things. This was December, and this was the last quarter of last year. The SPY Super System, 24,651, 156 trades, 24 last year. You see how many trades we took, but they don't last long. And you're only in one at a time, but 24 there and 17 in the room. These are all posted. These all went out on alerts. These are, if you'd followed these, you would have this, approximately the same results that I had, because these are what this is what the room did. I'm fairly conservative when I put the profit targets in there and the profits into the closed trades. But these all were posted, and you could have taken these. These are mine, but these are the trades that set up during that period of time. And if you know how to do that, you could have taken advantage of it. All right, so I just want to show you some of the trades we took. I'm going to go through this, and then we'll wrap it up. This was back in August. This was before I had the oscillator down here. But again, you see how busy it looks. That's why I went to the alternate template. But you see, this is what you're looking at, the current time frame momentum. That's all you care about. You see how it went from red to blue? You see where the stock is, price is? You see the VWAP in the 15? You see how it broke above there with a pop out of the box symbol? That is your entry for a SPY Super System right there. Right there. Selling, buying, breaking above the 15 in the VWAP. You stay in the trade as long as it stays above the 15 now. It rides up, you rise up, rise up. Big profit on this one. That's a big profit, $220 a contract. That's big, and you don't typically get that. Most of your trades you're going to find run between about $70 or $80 a contract profit up to around 120, 130, and then you usually get some chop and you have to take the profits. But this was a pretty nice one. But again, here's the 15 EMA, here's the VWAP, here's your current time frame momentum. That's the only thing we're looking at. That's it. This is telling your institutions are in there. This is showing that they're breaking above the VWAP, which institutions all use. That was a beautiful trade. This was another one. This was a $90 profit. This was fairly recent, I think. Yeah, this was in this 25th of February. Again, see the compression here? It's red already. It's yellow already. They're selling right here. But I get this pop out of the box and, well, this is where I take the trade. I'm in for 2 candles, this candle, and I'm out. $90 profit per contract. I get out right there. These are Heiken Ashi candles. I get out right there, but they're still selling. Now, they're still selling, but I got out because of this tail. I'll show you. Right here it is right here. This is where I get out of the trade. As we get in here and we get out here, they're still selling. It went back to buying again. And here's actually, if you were in this thing, you could be considered going long here right now at this point, where it breaks above the VWAP and you've got buying going on. All right. And there's the new template for doing the same exact thing right here. All right. So here's a trade here that it came in the last to 15. You see that's yellow. I had to wait. I have to wait for it to go to green. It did. I grab it right here and take it for about 4 candlesticks, up and out. Another one here. This was $130. This was on the SPY. Again, compression. I'm looking to get in. Buy at support. Remember, buy at support. Here's your support right there, the 15. Here's where you take it. You take it here, and as long as it stays above the 15, you can stay in. Now you can see the green here. The institutions are buying the heck out of the SPY this day. All right, so you get it right here, and you follow this up. And you know, it gets a little choppy. You probably might have wanted to get out here. I didn't. I stayed in it because it stayed above the 15, and then I get out here when I started getting these dojis. Okay, this is another one, $90. This is fairly common. Stock comes down, touches the 15. It goes from selling red, yellow to blue buying. You get in right here, and then it didn't move up very much. This is the IWM. Wasn't moving very much, but I did get out for $90 a contract right there, profit. Okay, and this was one for 120, same thing. Breaking down, see the selling, red, right here. Breaks down below the VWAP right here. You take it, you take this trade right there, and I stayed in this for a good long time. See, it's coming below the VWAP and the 15. So now, once it gets below the 15, that becomes my stop because it's sloping down. If I get out anywhere along here, I'm up money, and it comes down, and it starts to flatten out. And I get out here. I probably should have got right back here. It's pretty flat, but this is where I get out. But notice it changes from red selling to blue buying right here. And as soon as it went to blue, the stock popped up a little bit, right up to the VWAP. Okay, this was a big, huge trade for 280 that I get in. This is back in August. VWAP right here, breaks down below the VWAP and the 15. Is selling. See, it went red, yellow, and then red. I stay in the trade as long as it stays below the 15. Barely stays below the 15. Just kept closing below the 15. And then it gets to the pivot point. I'm watching it closely here because this could be a support level, and then it flushes. And that's where I get out. That was a very big trade. That's not common for that much. Phil, do I use, no, I'm just using, do I use specific settings for the VWAP? I just default, just the default. IWM here. So these are the SPY super system trades. I just kind of want you to get to see that. You can see the compression. You can see that it goes from selling red to buying blue. So we're waiting for a break. We get a break above the 15. You take it right there, right? And that goes up slowly, $150 profit. A lot of times you do not get these kind of long trades like this. The market lately has been up 2 or 3 candles and then down, up 2 or 3 candles and down. So you're in and out pretty quickly in a lot of these. Do I think that AI will obsolete traders? No. Do I think AI will obsolete traders? No, I don't think AI is going to obsolete traders at all. Nope. I mean, listen, we're following the institutions, all right? Whether it's an AI that's generating the institutions go in, or whether they're doing it through their algos, whatever's doing it, we don't really care what's causing it. We just want to know that it's happening. That's all we care about, all right? And you can write AI programs to try to mimic some of these things, but one thing about AI programs is because the market is so dynamic, and you can go from a choppy market in the morning to a trending market in the afternoon. You can go from small candles to big candles. Lots of things can change. Lots of news comes out. We can see that. We can see the news. We can hear the news. I have a news feed going all day. So I know when Powell was talking. And I saw when the market started to drop on what he was saying. And it became a great entry. So no, I don't think AI is going to obsolete trading at all. How do you know what pivot point is? Well, you just know it because it's going to be on the line. It's going to be a white line. If there's no white line there, there's no pivot point. Right? Here's the pivot point here on the SPY. But some of them, you don't have pivot points all the time, right? But once it's there, then you use that as a level where you can start to think about getting out if it approaches that pivot point. All right. So this is IWM. Here's the SPY. Again, this was when I traded both ways. See, it's red. It's selling. I'm looking for compression. Looking for a break below the VWAP right there. Take it. Drops below the VWAP. Moves down along the VWAP. and then I get out right here. As it turns, starts to bounce, I'm not staying in these trades. It was a very choppy day. I'm not staying in these things very long. And then it bounced back up. And then I took it long. I took it long here because I had enough room to the pivot point to make it profitable for me. So I get in here as I broke above the VWAP in the 15, and I wrote it up. Because see how it went to blue, selling, buying, institutions in, I'm in, I write it up, and I get up right here at the pivot point. I didn't mess around, and it basically wrote along the pivot point there. All right, so I won't go through too many more of these. You can see these setups. I didn't put any entries here. I kind of wanted to give you the opportunity to look at the chart, see if you can see it, see if you can see where you would take this. All right, this went from selling to buying right here. So you could try to take it right there. You'd in for 2 candles and then you're out. You probably would have broken even on this thing if maybe you would have lost a little money. And then it breaks down as it goes from green to blue, selling. You can take it here. Again, another quick move, then pops back up again. Probably make them just a little bit on something like that. So that's how you trade these things. And because there's a lot of these little setups during the day that are not going to produce anything more than about 70, 80 bucks a contract. But I mean, that's a lot if you're trading, a decent size. How do I monitor compression at inflection points? Well, if I look here, you see these breaks, these arrows. That's a compression break to the downside right there. See this compression? That's identifying a break below the bottom of that compression right there. And you get a couple. Sometimes you get a couple of those together. That's how these compression breaks take place. That's what I'm looking for. And if I've got a Heiken Ashi candle in here, if this candle is a Heiken Ashi candle, and I got compression break and a flat top, that's added conviction to the trade. My options at the money. A good question, Janice. The way I trade the SPY Super. Now listen, there's 2 different things here. There's the SPY Super System, which is trading off a 5-minute chart for quick type trades. All right, that's what we were just talking about here. These are not swing trades. These are quick trades. What I do on the SPY Super System trades is up till about 12:30 or 1 o'clock in the afternoon, I'm taking 0 DTE. I'm trading at the money. All right, I'm taking it at the money or 1 strike in the money, but they're expiring today. Once it goes past about 1 o'clock in the afternoon, I go to the next day's expiration. Not because I'm gonna hold them overnight, but because I want to mitigate the time decay during the afternoon while I'm in that trade. That's what I take, and I'm typically 1 strike in the money on those. Is the pivot point a magnet? Are we assuming the price will draw toward it? Yes, we are. Yes, it is, Carl. It's just like the VWAP is a magnet. And if you look at your charts and you look at the 200-day moving average on the daily chart, I have the 50, the 100, and the 200 on my TC2000. Why do I have that on there? Because that's what the institutions use. The institutions use those 3. And then they also use the 8 and the 15 sum, so I have that on there. But the major ones are the 5, the 50, the 100, and the 200. And then on the 5-minute chart, all the institutions use the VWAP. All of them use the VWAP. Do I ever do DTEs in your option room, right? So you do 0 DTEs you're talking about, Phil? Yeah, all of these size super system trades I looked here. If I took them before 1 o'clock in the afternoon, they were all 0 DTE. If I took them after 1, they were 1 DTE because I wanted to mitigate time decay. But for all intents and purposes, they're 0 DTEs because they're quick trades. Yes. I mean, the whole thing is you're trying to get into a trade that's going to go in your favor quickly. All right. So you try to get in right at support, right at the VWAP. Get in right at the VWAP. Then if it goes against you, like if I get in here, go along here. See, on this trade, I wouldn't have got in here, even though it went blue, because I wanted to break above the VWAP. Once it goes above the VWAP, I get in here. My VWAP is my stop. So if it turns around and goes against me right now, my loss is going to be very minimal, probably 20, 30, maybe $40 a contract or something like that, depending how far it's moving. That's why getting in at support and resistance is so critical, because you really cut your risk way, way, way down. Okay. Now I got to look at some charts. These are charts of the high probability trade setup that we took. These are not for the intraday charts. This is off of daily charts. This was Nike. This was the big, huge one we had here, right? And you can see that Nike was selling off. This was their earnings here, and they were selling off. But We get in on 28th. We get in right here. See on this candle, you see how it flushes down here? It breaks down below the, and don't look at this VWAP. VWAP is not used on the daily chart. VWAP is only used on the 5-minute chart. But it was breaking a compression, and we took it right here, and we stayed in it. It kind of went down against it. Some people actually get out here, get about $1 of contract profit. I stayed in most of mine, and this is what happened when they announced tariffs. And that was 216% is a huge move in an option trade. Okay, but you can see that it was we were in the right side. We were in the short. Here's Sarepta. We were in the short on Sarepta too. We took this one right here on 4-1. Took it right here. It went against us a little bit the next day. Moved down and then moved down a lot, and we get out 78% profit on here. But notice institutions selling, trend down, multi-time frame down. We had to be having both of these needed to be red or yellow. Current time frame momentum here, multi-time frame momentum. These both needed to be aligned, same as they did here on Nike. Couldn't take the trade if one of those things was blue or green. And the fact the trend was the same direction, that gave it even more conviction. Kirk, why is the VWAP used only in the 5-minute chart? Because that's what the institutions do. They don't use, when the institutions are getting in and out of trades, they're doing it on a 5-minute chart, right? They may be taking the trade long term, okay? But they're gonna make the buy based on the 5-minute price action. They're not gonna buy it. They like the daily chart just like we do. We go in, we use the daily chart as our main trade setup. If the daily chart's bullish, we can go long. If it's bearish, we can go short. But where do we get into the trade? We wait for a move to either the VWAP or the 15 and a bounce to go long, or a breakdown to go short. The institutions are doing exactly the same thing. They want to buy Apple long. They like the daily chart. They wait for the VWAP to get that. When a stock price comes down to the VWAP, that's where they get in, right? And that's why they use it on the 5-minute chart, and you don't use it on the daily because nobody uses it. No institutions use it on the daily chart. We're just trying to mimic the institutions, that's all. All right, here's HIMS. This was another beauty we had here. This was, again, green, 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 green here. It's yellow here, it goes green. Everything's green. They're buying. Momentum is way maxed out here. It's riding along the 15 EMA, which you can use on the daily. You can't use the VWAP. And these are Heiken candles. So we get in here. I don't know why I didn't get in back here. I probably didn't notice it. We get in here, and we stayed in. We took some profits, 25%, and then it left a runner on, and then we got this big pop, and then running got off 269% profit. Big trade on HIMS. Okay, same thing here is Palantir. People were asking about Palantir. All right, this is where we took Palantir. See the selling? Yellow selling, blue buying, back to yellow, chopping around. You can see it's chopping around, right? We get in here, and when it went to green, we took it here as it broke out above the previous compression, and we get out in 2 days for 31% profit. All green, everything's being bought here. All right, that's Palantir. Twillo, same thing here. This was Twillo, 58% profit in 2 days as it breaks above compression. Actually, this arrow should be over here. We get it here on the green when they were both green. This was already green. Current time frame momentum was bullish. We wait for the multi-time frame to switch to green as well. Lulu, another nice one here on a nice drop. This was earnings. We didn't take it here. Notice it compressed. They're selling it. See the red? But notice the little blue here, a little buying coming in. We don't want to be in it long, short right now. Then it goes to yellow and red. We take it here, and we take it overnight, and we get in for $1.92 or $192 a contract, out for $300 a contract on Lulu. Okay, Amazon. This is a 5-minute chart. This was an intraday trade on Amazon. All right, coming along the 15, pop out of the box, see green, right? 5-minute chart. So I'm interested in day trading this. We took 32% profit in 45 minutes, took it as it bounced above the 15 right here, and just rode it up and get out right here on this pop. It probably could have stayed in a little bit longer because everything was still green, but I had 32% in 45 minutes is fine. ENPH, another nice short, compress, break down below the 15, everything's red, take it here. We're in it for an hour, out for 20%. So I think you can see these things. And again, here's the 5-minute chart. The VWAP becomes a key. See how we break below the VWAP right here? Everything's red. We're waiting for compression to break. Compression breaks. There's the pop out of the box symbol for compression break. Take it here, 50% in an hour on Verizon. All right, and that's Tesla. That was a big one we had overnight. We actually took it short because of we was coming up with a pop out of the box symbol right at about 4 o'clock in the afternoon. Everything was selling red and yellow. So we took it overnight and we got a nice little break from 120 down to 112. Big profit in Tesla. Okay, let me see if we got a couple more questions here. Can you use ES and MES futures and follow your SPY trades to fly losing value over time? Yes, you can, Omar. You can trade futures to offer the same information, and no question about it. You know, you're more heavily leveraged, but you're not going to have any time decay to worry about. I don't have particular time decay to worry about very much, because when I get into a trade, I'm probably going to be out of it in 4 or 5 candles. But what happens is if I get into a SPY trade, let's say I get into a SPY trade at 2:30, and then the SPY moves sideways for 20 minutes. If I'm in today's expiration, I'm getting a lot of time decay on that option, whereas I'm not getting much time decay on the next day's option. Okay. I don't like options. You consider them dangerous. That's fine. You can trade futures the same way. You can trade futures on. I mean, you can put anything you put in the chart, any symbol you put in the chart, whether it's NQ, ES, CL. You can put oil in there, gold in there. You can trade any of those commodities off of exactly the same information. It's going to show you this. It's because the SPY super system is going to show you the indexes. Their indicators for whatever stock you've got in up there. Will the software scan for the best setups? It does up to a point. I mean, the setup we've got, I'm looking for, that's why I have a scan for, I have scans for pop out of the box symbols either way, and I have scans for stocks with relative strength and relative weakness. So those can give me the stocks that are outperforming the market each day or are underperforming the market, and that gives me a starting list. I also have scans of TC2000 that I use to find other conditions, Heiken Ashi reversals and things like that. Do I do covered calls? I don't do covered calls, Janice. Typically covered calls, the only time, excuse me, let me get a drink here. I'm getting a little hoarse. When I started investing, I used to buy dividend stocks and I would write covered calls against them to bring in premium. And if they went up to my strike price and they went through them and I get called away, I was happy. I collected the premium on the covered call and I made money on the stock. But I don't do that much anymore. The only time I do covered calls is if I go out, let's say I go out 2 or 3 months in time on a long, and the stock's kind of chopping sideways. Sometimes I'll go and start selling covered calls on a weekly basis to bring in premium to offset the cost of what that call was. That's the only way I use them. I don't use leaps. That you can use leaps and sell covered calls against those. I don't do that. Yeah, the scans are just a way to find ideas which you can further criteria to make the trade. That's exactly right, Stan. There is no scan that's perfect. You can find a scan that's got the most. In TC2000, I've got about 100 scans, but I'm looking for specific conditional setups. All right. Heiken Ashi reversals breaking through the VWAP. I can find those, but you've got to take a look at the whole context of what the stock's doing and what the market's doing that day. So it's very, very difficult just to have a scan give you a trade to take. I mean, I have to look at them after they come up in the scan. I've got to look at them and I've got to see whether the criteria meets it, whether the setup's good, where is support, where is resistance. All of that is very difficult to try to put into a scan. Okay. Any way of measuring spread between the 15 ENA and the VWAP? You notice one chart, you got Bollinger Bandwidth. Bollinger Bandwidth is 15 minutes. The Bollinger Bandwidth on some of those charts, it depends on the chart that it's on. If I have a Bollinger Bandwidth on, if you were talking about my TC2000 chart, I don't put Bollinger Bands over here. It's going to be way too busy. And all I do on TC2000 is just measure whether the bands are expanding. I mean, the top band is moving up and the bottom band is moving down. That tells you there's a compression break. And that just tells me that there's a break of compression, which gives you a little bit more conviction. That's all. But the difference between the 15 EMA and the VWAP, you have to eyeball it. I may just eyeball it. The only thing I use on TC2000, I use the 8 exponential moving average on the daily. And if a stock gets too far away from the 8 exponential moving average, if it gets more than 2 ATR above or below the 8 exponential moving average, in my opinion, it's too far extended and it's likely to head back toward the 8 exponential moving average fairly quickly. So I won't chase a trade that's far away from it. All right, good questions. All right, so again, here's what we use in the room and on the alert service. We've been doing this for 4 years here. Straight calls and puts, straddles and strangles. Straddles and strangles are non-directional. We use these a lot. We had some really nice ones this week. These are stocks that we think are going to move a lot, but we don't know which direction, and we don't really care. We're just waiting for the stock to move. You can do very well with these straddles and strangles, but the setup criteria is very critical, and I have a video on that. Straight calls and puts, everybody pretty much understands those. Debit spreads using weekly options expiration. All my debit spreads always expire current Friday. Time spreads over earnings. This is just how we capture volatility crush when the earnings come out. When foreign earnings come out, the market makers jack up the price on the options. They make them very expensive because they don't know which way it's going to go and how far it's going to go. And this strategy is meant to capture the crush in the volatility. In other words, when the options are repriced after the earnings come out and the market makers peel the extra premium out of there, this is a methodology that allows us to capture that. We sell this week's calls and we buy next week's calls, and we capture the volatility difference, and we capture the difference in time decay. And the weekly ATM strategy, which I haven't used lately, haven't used it since the market's been so choppy. These are only we do on stocks that are neutral to bullish, and when we have at least a market that we can depend on, which we don't have right now. And then I do credit spreads, and then of course the SPY super system that I do in the room. I'll let you know when I see a setup. I can't post these and I can't alert on these. Okay, so that's just so we're clear as far as what we can do. All right, so listen, this is what the offers are for this weekend, for this Easter weekend. You can take a 2-week free trial to the room, and that comes with the alert service. Okay, so you get the room and the alert service. So you'll see the SPY super system trades called out in there if we come across any. So you have access to the room, access to the alerts, and you get a chance to look at all the trading modules that I've got. There's about 30 of them. Free for 2 weeks, then it rolls over to a quarterly subscription, $3.96 a quarter, which to me is cheap. But anyway, that's the way it is. Now, so again, you'll see the SPY super system trades. Now, if you want to get a better price on this, if you think you like this SPY super system and the room and the alert service, you can take the annual access is right here, $11.96. So it's a lot cheaper than taking the quarterly. But some people want to test it out, so that's fine. I understand. 2 weeks is really not a very long time, but I understand that. All right, so again, annual, you get the trade alerts, you get the trading room, again, open every day, market open to market close. You get a Discord chat community. We've got a couple of additional professional traders in there. They post all day long. They answer questions all day long. They post information on what the sectors are doing, lots of information. And again, I have a news feed that goes all day long, so I'm getting a lot of good information from the trade exchange relative to news that might affect the market. And then again, you get Wise Way to Trade Options. This is all of the videos that I've got, and it's $11.96 a year, which is that's a real bargain. Because again, last year at $2,000 a trade, we made about $60,000. So, or you can do a one-time payment. This means you don't have to re-up every year. $24.96 for the forever. For the room and the alerts with the Discord and all in the videos and everything. All right, so it's 50% off, pretty good deal. And now, if you're interested in the software itself, the SPY Super System software, this is the software that indicates when the institutions are in trades, when they're not. This is the software we use for the SPY Super System trades. If you own the software, you don't have to, in the room, you don't have to watch the charts that I'm showing because you can look at your own charts. And if you want to do it all day long, it's a good idea to have these. You can still be in the room and have your own software. But if you buy the software, it's $14.98 for the SPY Super System. Again, that gives you the Compass trading system with all the scanners. So that's called the SPY Super System. You get the Masterclass on all the options, trade strategies that we do, plus the indicators. I get one on straddles and strangles, one on time spreads, one on the highest probability trade setups. There's a video in there, the most common mistakes that retail traders make. A lot of information. And again, if you buy the software, you'll get a month in the trading room for free and the text alerts for free. So you get in for a month. If you buy it on the annual subscription, you'll get a month of the trading room and the alert service. Gives you a good chance to test it out. Or you can do a one-time payment, $19.98, only $500 more. You can get the software forever. You can have it forever, and you'll get 3 months in the trading room. You get 3 months of the alert service. You do get the white glove installation. Basically, Brightline will just take over your machine. If you don't have HOS loaded, they'll download it because you don't have to pay for it, and then they'll load the software on there, and it's going to look exactly like my software does. You get exactly the same indicators, the same scans, all of that stuff will be there. Okay? And if you have any questions, you can just put your name and number in there, or you can call Rory, 786-732-4656. If you go to the chat box right now on there, you're going to see a couple of links, one for the room and alert service and one for the SPY Super System. And any question, just call Rory. He'll take care of that for you. And again, I certainly appreciate everybody being here today. See if there's any other questions. Do I have a fully automated software that opens and closes trades? I don't. If you talk to Rory, they have one that's an auto trader. I don't use it, and I prefer to use my own criteria for stuff because things change so fast. But that would be that. I don't have anything that opens and closes it. Typically, when I take like a SPY Super System trade, what I use is an OCO. I don't know if you know what that means. That's one cancels the other. When I'm into the trade, I'll put a sell order at my profit target, and I'll put a sell order at my stop. Like if it's below the 15, I'll put a sell order down there, and then I can adjust them if I want to. So that way I don't have to watch it. But typically, when I do a SPY Super System trade on the SPY, the Qs, the IWM, I'm watching it all the time. I'm not doing anything else except watching that trade because it can move around so fast, and if 15 seconds wasted, you can lose half your profit. So that's how I do that. Dave, you have Compass but never use it. How much is it just for the room? Yeah, the room is again, the room is right here. If you just take the room, it's $11.96 for the year. If you get in for a 2-week trial, it'll be $3.96 a quarter. If you got the SPY Super System, it'd probably be a good idea to come into the room and learn how to use it. I mean, I've got videos and all that, Dave, so that should help you. Carl, appreciate it. Thanks for being here. Appreciate it. Good to see you again. Good to see you again. What about monthly, Philip? Monthly, you're talking about monthly charges. You have to talk to Rory about that. It's my feeling is 2 weeks isn't long enough to give the system a good test, especially in this kind of a market. But that's some people want to do. I think you got to have at least a quarter to really get a feel for it. I understand people don't want to spend money. Learning how to trade is like going to college. And if you're doing it and you're getting in, I think what we teach in the room, as opposed to doing it on your own, is going to save you thousands and thousands of dollars. It's going to save you a lot of tuition. But you've got training. Training is very important. To learn how to become a trader it's very specific, and it's important to do. You can get into there and you can do some paper trading to learn stuff. But people, I mean, I've had people that didn't want to spend $2,000 on software, $1,200 on software. But if I talked to them 3 weeks later, and they lost $4,500 trading, and it doesn't even make any sense. But listen, I've always been a big believer in paying for stuff that's worth money. When I first started doing this, I spent a lot of money on stuff to find stuff that worked and stuff that didn't work. I was in 110 different trading rooms back about 16 years ago to try to find out which ones worked and which one didn't. Most of them don't, and I focused on the criteria that worked. Couple more questions here. Kirk, you're welcome. Do they ever come out with a version, a Ninja? They have a version of the SPY Super System, which is actually called money flow tracker that runs on Ninja. And now Ninja is typically, most people use it for futures, but it doesn't look the same. There's a lot of differences, but they do have one on Ninja, and you can talk to Rory about that, Dave. Anthony, enter one strike in the money or out of the money. No, one strike in the money or right at the money. Don't go out of the money. Anthony, I've been testing a methodology on the SPY super system using out of the money calls or out of the money puts, but your wins and losses are going to be, you're going to make more money if you're right, but you're going to lose more money if you're wrong because the time decay kills those kings. So I would say go one strike in the money or right at the money if you can. So the SPY super system uses Compass. Yes, the SPY super system is Compass. This is the old Compass system with some additions and modifications to it. Yep, that's the Compass system. What time is the options room open, Stan? I usually start about 9:15 in the morning. I have a news feed. I go over the news. I open about 9:15 so that I can get any kind of alert adjustments out to any of the members. And then we'll talk about what the market's doing today so far. We'll go over the strategies that we use. I try to reinforce the indicators. Basically, I spend about 15 minutes doing that, answering questions. Market opens, we're ready to go, and we're off and running. And I typically don't take trades for at least the first half an hour. I wait for the market to settle down and get a direction before I dive into anything. Too much FOMO going on at those point in times. And I say that every day. Don't chase. Have patience, relax. Let's see what the market does. Yeah, David, just need the room to learn how to use it for sure. And you'll get there's a video on how to use the SPY super system. Because that, I haven't had that around that long. I traded it myself, but I never really integrated it into the system because it's mostly for traders that really want to trade quick stuff. You're not scalps, but they're fairly scalpy. But you also typically need to have either a cash account or over $25,000 in your account to do this because you can't trade, the number of trades as under pattern day trader rules. Is the MFT the same indicator as the SPY super system? Yeah, the money flow tracker, it looks at momentum, it looks at trend, and it looks at money flow. It's looking at the same kind of things. It's just displayed differently. Typically on there, you're using futures. You typically are using something other than a 5-minute setup. They use Rinkos, they use different range candles, things like that. And again, I've traded futures before, and I mean, I can trade futures on Thinkorswim as well, right off of this software. This software is perfect for trading futures. I mean, it's the same as it is, and I like it like this because, see, the thing with trading stocks that you have to understand is the one thing that stocks have that futures don't have is relative strength and relative weakness that you can compare to the S&P 500 or the Qs, right? You can't do that with futures. Futures are futures. I mean, they are. That is relative strength. They have everything built into them. There's nothing you can compare it against unless you're comparing the Qs against the SPY, right? Like when I look at take a SPY super system, I'm looking at the SPY, the Qs, the IWM. I'm going to take, all things being equal, if I'm going long, I'm going to take the one that's strongest for the day. If I'm going short, I'm going to take the one that's weakest for the day. So that's a type of relative strength, relative weakness. But if I want to trade Tesla, and Tesla is outperforming the SPY for the day, then that becomes a big edge for me. I've got an edge over the SPY. So if the SPY starts to falter, Tesla's likely to keep going or at least go sideways. You don't have that ability when you're trading futures. Futures are much more difficult, in my opinion. All right. All right, took a little longer than I thought here, and I didn't mean to take so long, but I had a lot of questions, and I hope everybody found it useful. I hope you'll take a look at Heiken Ashi candles and try to use those. I hope you take a look at the room and come in for a year if you can. I think that gives you plenty of time to really get a feel for it. And if you're a trader, $1,200 is not a lot of money because you can do that in one trade, obviously. Yeah, and the software again is great. I love the software. This made a difference in my trading when I found it. I bought it. I paid full price for this thing when I found it before I was part of doing this trading or anything. But it made a difference in my win rate. It moved my win rate up about 6 or 7 percentage points, which is a lot, from about 81 to about 88, and that makes a big difference. Hey, Doug. Hey, listen, thanks for being here, Doug. I appreciate it. How many trades do I make per day on average using the SPY Super system in the alert service? The alert service is not going to be a lot. The alert service you might only get in a week. Depends. That last graphic I showed you there, we had 4 on in a week. Some days, there'll be days that'll go by that I don't take any trades because the market is not allowing us. Right now, swing trades is brutal. And I try to do swing trades on alert service so that people don't have to be jumping in and out. But I will put a trade into the alert service and I get in like at 10 in the morning with hopes to get out by like 2 o'clock or something. But you're only going to see maybe 3 of those, 4 of those a week. Some days, sometimes there'll be 2 a day, but not normally. The SPY Super System trades is a whole different story. SPY Super System trades, which I use on stocks and on the indexes, some days I'll have 5, 6, 7 of those. Just depends on the market, Omar. I can't predict what the market's going to do. If I've got a choppy day, the SPY's going up and down above the view app for 2 hours, I'm not going to take very many trades. I got to have some trend to follow. If you don't have a trend to follow in the market on a 5-minute chart or on a daily chart, if you don't have a trend in the to follow, you've taken one of your main criteria out of the process. So you're trading with less information or with less of an edge. So it's going to reduce your profitability. It's going to reduce your win rate somewhat. That's why patience is so important. Wait for the trades to come to you. Trade when the iron is hot. When the market is trending up, those are the way you want to trade. Those are the ones that you can put more money into. Okay. All right, everybody. Listen, thanks so much for being here today. I appreciate it. I didn't mean to take up so much of your Saturday, but I do appreciate you taking the time to come here and join me. Again, give Rory a call if you're interested in anything that I can't answer here. Here's your 2-week trial. Here's the live trading room and text alert service for a year. $1,200, pretty cheap. And one-time a payment, even $2,500. And here's the software. This software allows you to do the SPY Super System on your own. I have it up in the room every day, but if you get your own, it makes it much easier for you to be able to trade this. All right, everybody, have a great weekend, and we'll see everybody on Monday. Hope to see some folks in the room on Monday. Dave, you don't know how to use TOS, not sure you want to learn it. Here's the thing, Dave. Where do you trade now? Where do you trade? Futures on Ninja. Okay, well, if you're trading futures on Ninja, you can probably get the money flow tracker if you want to use that. I talked to Rory, he can put that on Ninja for you. I don't trade off a Thinkorswim. I don't have to learn Thinkorswim. I don't really want to trade off a Thinkorswim. I trade off a Tradier, right? But I use Thinkorswim because that's where the SPY Super System resides, right here. But I'm not trading off a Thinkorswim. I'm trading off. All you're getting is you're getting your indicators from there, and you're getting your buy signals from there, and then you trade wherever you want. You have the money flow? Well, you should have the information. It's not going to be exactly the same as what I do over here, but again, I haven't used it, so I don't know. Peter, thanks a lot. You learn more about Heiken actually than during other webinars. I try to be fairly inclusive in it, and just try them out. Try them out. They really work really well. Janice, thanks very much. Great presentation. Appreciate it. Thanks, Peter. All right, everybody. Have a great rest of the weekend. Looking forward to see some folks in the room on Monday. And enjoy yourself.